Okay, hello everyone. Good morning. Welcome to Coffee with Mark this morning. I will be running the show, and Markus will be joining us next week. It is Thursday, November 2nd, and the first message I see is from good old Pete. Go Astros. If you're a baseball fan, it was quite a series. If you're a Dodgers fan, you're probably a little disappointed, but I guess any series that goes 7 games is a fun one. So for any Astros fans out there, glad you were able to get a winner there. So, oh gosh, what else is going on in the markets? Well, it looks like President Trump has pretty much decided on who the next Fed chair will be. It looks like he's going to appoint Jerome Powell. Last week or two, that had kind of been the direction things were going. He should make the official decision or announcement today, but it sounds like that's going to be the case. We'll have a new Fed chair. Fed Chair Janet Yellen, her term comes up at the beginning of February. So she'll be presiding over the December meeting and will be presiding as Fed Chair over the next couple of months during that transition. That is, of course, if President Trump does indeed pick Jerome Powell. It sounds like Jerome Powell is a safe bet for President Trump and kind of a Fed chair who is expected to kind of do the same thing with gradual raising and focusing on shrinking the Fed's balance sheet. So there shouldn't be any real major surprises there. But that is big news, and it's something that traders are keeping an eye on today, waiting for that confirmation. But at this point, it's kind of expected. There's also the tax plan going on. It sounds like the GOP is trying to rush the release of a tax plan, and so trying to get that out today. We'll see if that happens. These aren't scheduled reports or anything, just kind of some news items that are important and things to be aware of. Of course, the Astros beat the Dodgers. For you uh, Astros fans, good job there. And then earnings news. Gosh, Tesla reported, I believe it was after the bell yesterday. I'm pretty sure both Tesla and Facebook reported after the bell. And in overnight trading, they were dropping a little bit. Tesla having some serious production issues with their latest model, that $35,000 model that it's expected to really kind of take over it with the electric car industry and just be a real value and powerful model and product for them. However, if they can't produce it, there's an issue there. So Tesla was dropping overnight. And Facebook, sounds like they reported great earnings, but then they said that future profits could be affected with their efforts to combat fake news and also abuse. So we'll see what happens with Facebook if anybody keeps an eye on those two stocks. Those aren't two stocks that I'm actively trading, but of course they're big ones. Another interesting thing here, uh, Bitcoin. I don't know if anybody heard about this or not, but Bitcoin futures are going to be offered by the CME. So for anybody that was on the fence about Bitcoin and the legitimacy of it, of course, it continues to shoot up. It's just a wild, uh, cryptocurrency, and there's a lot of interest in cryptocurrencies, and people are asking about uh, cryptocurrencies all of the time. I think it's going to be interesting to see how this futures product works out, but that's just like one more step to legitimacy for anybody who doubted Bitcoin or was on the fence. So CME futures, there's information. I think I thought I read that they were going to focus on it for next fall, but I'm not 100% sure there. But that could be interesting. That's something that I'm keeping an eye on. Of course, whenever they release a new product, there's like no volume, and if it's a wild market, then there's crazy volatility. So you probably want to stay away from it right when it's introduced. But it could be a fun market to trade. We'll have to see. One person is saying no sound, and I believe that is just that individual and not a general issue. Um, so let me do this. Yeah, everybody else says that sound is not an issue. So I sent him a quick message there. Okay, so what's going on today? Well, we had, let me bring up the economic calendar real quick. And see, this is where today isn't that busy for the economic calendar, but tomorrow is a big day. Today we had unemployment claims released in the morning. 229,000 unemployment claims versus the 235,000 expected. So slightly better than expected, essentially in line there, though no real movement because of that. There's a few Fed members speaking throughout the day, but tomorrow is going to be the jobs report released 8:30 a.m. Eastern time. So that's a biggie for the markets. Before U.S. markets open up, it's something to pay attention to. During the session, we have ISM non-manufacturing PMI at 10 a.m. Eastern time. So not a whole lot going on today for the economic calendar. We mentioned some of the political events, the new Fed chair announcement, and a tax plan if it's introduced. But tomorrow, we're going to have a bigger economic calendar. So just some things to keep an eye on. Real quick here with markets that we trade, I had an opportunity to get into a Seahawk trade in crude oil, so we were able to lock in 6 ticks there. I have an order in the market as well. With binaries, there is a sell signal, but it has not been triggered yet. And if we look at crude oil, with crude oil, there is a buy signal, but it has not been triggered yet. We're going to have a pretty strong move higher for this buy signal for crude oil. The other market that we're keeping an eye on today is the NASDAQ for binaries, but the trigger is up here. The trigger is if we trade above 62.77 and a quarter, so that would be 62.77. I'll just mark this and make it accurate. So if we trade at 62.77 and a half, 1 tick above the trigger price there, because we need to be above 62.77 and a quarter, then we will see our NASDAQ binary triggered. So we need to get some movement for the binaries to trigger. Looking to take a couple of Seahawk trades in crude oil so far, off to a nice start with a win, and looking for another entry at 54.22. So today's session, I know Markus has talked a little bit about, or he asked what was the biggest thing holding you back, and he did a session on that yesterday, and I know that he's going to tackle that a little bit more next week. Here, I'm going to do this. I'm going to slide over my charts. I just want to talk about an important topic. I'm going to keep it brief, but I think this is important. I'll slide this over here just so I could keep an eye on crude oil. So this is where I think a lot of traders get it wrong, or they have expectations that are not in line with reality. So when it comes down to it, you only have 2 decisions with trading, whether you're buying or selling, right? In its simplest terms, that's what trading is all about. Are you going to buy or are you going to sell? And your decision to buy or sell is based on a belief that you have, a belief in how that market is going to move in the future. So this is like with economics, we're taught about supply and demand. And sure, when there's a belief that the market's going to go higher, you might have more buyers. And when there's a belief that the market's going to go lower, you might have more sellers. But it really comes down to beliefs. That's why when a stock or market should do what you've been told it should do, and then it doesn't happen, it messes with your mind, because what's really happening, what's driving the markets is beliefs about where that market is going to go. And of course, that's driven by fear and greed, but not so much supply and demand like we're all taught in school. So really, as a trader, you have a decision. Are you going to buy or are you going to sell? And once you're in a trade, there's really two outcomes. There's either a profit or loss, right? That's it. So you get to decide whether you're going to buy or sell one of two things. And once you're in a trade, there's either going to be a win or a loss. You're either going to profit or you're going to lose, period. So this is where I think people get a little stuck. So when we're trading and we're basing our trades on beliefs that the market's going to move higher or lower, we expect the market to prove us right. How ridiculous is that? Right? If we get into a trade and then the market moves in the direction we expect it to, we expect the market to prove us right. The market doesn't care about us. The market doesn't know who we are. Instead, we're trading beliefs, and when it comes down to it, our beliefs should be based on our expectations. And this is where two things are very important. One, trade what you see, not what you think. And two, know your numbers. And this is where I think a lot of traders get it wrong. Because if we are buying or selling based on a belief, and we expect the market to prove us right, and we believe that we did a good job if we have a winner, and we did a bad job if we have a loser, this is where knowing your numbers or not knowing your numbers interferes with your progress and success as a trader. Because in my experience, most traders, they don't know their numbers. They're not using a strategy. They have expectations to be right or to make money, but they don't have realistic expectations based on the approach that they are using, right? As an example, let's say that we're trading a strategy. Oops. Say trading a strategy with a 50% winning percentage, and our risk reward ratio is 1 to 2, right? So if we have a winner, we make $200. If we have a loser, we lose 100, right? So if you don't know your numbers and your first trade, you have a loser of $100. Now you're kind of bummed because you expect the market to prove you right. You have this great strategy, you learned it or you created it on your own because you made some observations in the market. First trade is a loss, and you're kind of upset because it didn't work out as expected. I'm adjusting my Seahawk to 54.25 based on the way crude oil is moving, and you have a loss. Okay, second trade, you have another loss. Now you're really getting a little upset because you're thinking, hey, I have a 50% winning percentage here, and I should be right half of the time. So what's the deal? Trade number 3, you lose again. So this is where I see traders really get stuck because they don't really know the numbers because they either learned a strategy and they haven't tested it on their own, or they have come up with an idea based on some observations in the market, but they don't truly have an expectation of what could happen with the strategy that they're using. They throw out a strategy, right? And if you do this every time, you're always going to trade every strategy to its worst drawdown, right? Because you don't get rid of a strategy when it's working. Nobody decides to abandon a strategy when they're making money and it's working great. They abandon a strategy when they are losing, right? But the concern or the biggest problem I have with that is, well, what losses are normal, right? Because the market's not going to prove us right. The market could care less about what we're doing. Instead, we have an expectation on how the market could move, and we are trading what we see, not what we think, not how we think it should behave, but instead we're looking at setups, we're trading what we see, and if we know our numbers, we know what type of losses are expected and normal, right? Because trade 4 could be another loss, right? Now we're down $400 and we're 0 for 4. Trade 5, let's say it's a winner. Okay, now we're down 200, right? So this is where a lot of people start to panic and they don't give the strategy room to be successful or time to be successful. But with one trade, we went from being in the whole 400 to cutting that loss in half. Trade 5, or trade 6, excuse me, plus 200. Now we're break even. So many traders start to abandon what could be a decent strategy here. And the only reason they abandoned it is because the market didn't prove them right. And they didn't have their numbers. They didn't know their numbers to know what type of losses were to be expected. Trade number 7, let's say that it's a loser again. Okay, down 100. Here's another scenario. So if a trader gets back to break even and then has another loss, a lot of traders will abandon the strategy, go, it's not working, I'm going to move on. Why do that, right? Okay, real quick here. Trade number 8 plus 200. I think you could probably see where this is going. Trade number 9, plus, having a problem with my plus key, or it's my fingers. Trade 10 plus 200. Okay, so we had 1, 2, 3, 4, 5 losses. 1, 2, 3, 4, 5 wins. Winning percentage, 50%. 5 out of 10. And our losses gave us $1,000. I'm sorry, our wins gave us $1,000. Our losses gave us a $500 loss. So we're plus $500 over 10 trades. That means we're averaging $50 a trade. I think that this is a very typical scenario, and this is why in the past we've said winning percentage doesn't matter, because you can be profitable and make money even if you're wrong half the time. In fact, many times when we have a 50% winning percentage or 40% winning percentage, there's times with Power X that there might be a 40 to 50% winning percentage, but then the risk reward is great, right? So anyway, my point here is that it's important to know your numbers, because if you don't know your numbers, you're really just gambling in the market. If you know your numbers, then you have something to compare things to, right? You know, okay, based on my testing, I experienced 4 losses in a row. Without knowing your numbers, you don't know if 2 losses in a row or 20 losses in a row is normal for that strategy. And then the winning percentage doesn't matter to me. I'm not going to throw out a good strategy because that is a 50% winning percentage or 40% winning percentage, but it sets up some sort of expectation, right? Where I can't expect the 50% winning percentage to be true after 2 trades, but after 10 trades, it's going to get a little closer, right? After 100 trades, it's going to get a little closer to that expectation. I mean, even if you flip a coin 100 times, they say that oh gosh, what's the number? I think that only 8% of the time it's going to come up 50 heads and 50 tails, right? So a majority of the time it's not going to be perfect. However, the more tests you have or the more trades you have, the closer it gets to that 50% winning percentage. So we can't just throw out a good strategy or method because of a couple of trades or a couple of losers. But if we have our numbers, we can make a decision, or we can compare our live trades to our numbers and say, hey, is this in line with expectations? Is this type of loss normal? Am I on track, or am I really getting away from all of my testing? So anyway, to me, this is a very, very important concept, and you've probably heard Markus mention knowing your numbers before, but I just thought it was important to review it one more time, because this is where I think a lot of traders go wrong. They buy a software, or they learn a strategy, or they look at the market and they go, gosh, the markets go up every time in the last 30 minutes of the day, and they make an observation for a week or a couple of days, and then they start trading an idea and risking money in the market without knowing the numbers. So how do you know your numbers? Define your rules. So let's actually make this a question. How to know your numbers? 1, define your rules. 2, test it. It's as easy as that. This is where Markus and we normally use the 40 trade test. Because after 40 trades, you typically have some sort of statistical relevance to this idea, right? The more tests, the better. But if you have 4 trades, it's not enough. If you have 400 trades, that's great. But 40 trades normally gives us some sort of numbers that we can really evaluate and work with. We have enough tests to come up with a winning percentage, to understand the risk reward or the average profit per trade, right? And to see what sort of consecutive losses can occur with a strategy, what type of drawdown can occur. If you do this and you know your numbers, then you're going to be better prepared for trading and risking money in the market. You're going to have more confidence, and you're going to really see if you should abandon a strategy because it's simply not working, or if it's just underperforming a little bit because of current market conditions, or maybe just because that's the way the strategy works, right? Once you know your numbers, you have something to compare to, you're going to have more confidence and you're going to be more successful. So anyway, I hope this helped. It's a very important concept, and this is why we say know your numbers. And I hope that this coffee with Mark just kind of sets the tone for the rest of the day or the week. And if you don't know your numbers, now you have a job ahead of you. Define your rules and test it. Okay? So that's going to do it for today's session. I hope that you have a great trading day, a great Friday if you're trading, excellent weekend, and we'll see you back here next week. Okay? Take care, everybody.